let's say hello to M&M Financial's management. NBFCs are in focus on the back of the farm loan waiver we saw announced by Maharashtra. Mr. Ramesh Iyer, VC and MD of the company, is with us. Mr. Iyer, good to have you on Trading Hour. First basic question, will your company see any impact because of this waiver that Maharashtra has announced?
No, I think it's important to understand that farm loan waivers are for a very different segment of customers. So we work with customers whom we give loan for acquisition of assets, and they bring in at least a 25% margin. So if you were to take any asset value of about 5 lakh of rupee, we are talking of customers already bringing in about a lakh and 25,000. So typically these are not the same segments that we work with, and we have had such instances in the past when waivers have been announced and we've not had any direct impact. But of course, yes, why will not some customer come and want to come and ask us, will we get some concessions on interest, etc., on a specific area, specific time? But I would kind of largely think it doesn't impact our profile of customer.
Okay, well, that's good to hear, Mr. Iyer. But have we seen disbursements moving higher in Q1 and the outlook for FY18?
So clearly, as compared to the previous year, the year started with a more greener note, in the sense that, last year, first couple of months was more drought-like situation in many states. With good monsoon last year, the sentiments have remained positive. And I guess with the possibility of a good monsoon even this year, the overall sentiment definitely is very, very positive as a trend is what we see. It may be difficult for me to put a number out as to what it would be. But it's important to note that, we are an enabler helping out, providing loans to customer to acquire whether cars, tractors, pre-owned vehicle, utility vehicle, any of those products. And we find all the OEMs are focusing on rural India growth story. And we very strongly believe that we would be one of the beneficiary of the emerging volumes from these markets.
Still, sir, if I could push you on this a little bit, can we get some sense of numbers, maybe an idea of the kind of disbursement growth you're looking at this year?
No, so I honestly don't want to put a number, is not what we do all the time. But as I'm telling you, the overall volumes in that market will definitely look positive with every OEM focusing in that market, and the sentiments are pretty positive. So I think the two together, and we have been retaining our market share all time in the past. We have, created deeper penetration. We have built relationship with all the OEMs. So I think we are very functionally ready to take complete advantage of that new emerging rural India.
Okay, fair enough. A word on collections. Have things stabilized there?
So I think it's again important to understand. Yeah, I think it's extremely important to understand that last year was in many ways not a very normal year. Effectively, if you look at 12 months of working, first couple of months were drought-like situation. Then we had a monsoon coming in and we had some positive impact out of monsoon. But then we had the impact of demonetization, taking it through to the last quarter. And then last couple of months was good again. So on a 12-month basis, I think we would have hardly had 3 or 4 months of good working. So is that what one would expect going forward? I think my clear answer is no. We don't expect this year to have any kind of such abnormalities plaguing us during the year. So clearly, if one was to compare previous year and current year, there is every reason to believe if none of those events are going to repeat, I think the customer ability, customers' intentions, customer possibility will all be very, very positive in that market.
All right. Will you be able to deliver double-digit growth in terms of your net interest income? I understand that you don't want to stress specifics with respect to disbursements or collections, but if you just talk about net interest income growth?
No, so, what guides the NII growth? One is, of course, the mix of our product. So if we do little more of tractors, if we do little more of pre-owned vehicle, definitely the yield improves. And therefore, that's one very clear direction for the NII increase possibility. And tractors have done well. And we have always said that our growth is going to be also coming from the pre-owned vehicle. I think the other element of NII growth comes from the borrowing cost. And we have seen continuous decrease in the borrowing cost. While we don't get the benefit in our entire book, because not all liabilities mature at the same time, But even if one was to look at over a period 100% drop in the borrowing cost, we will at least get a 40 basis point benefit, because that's how the liability correction will happen. So I think if you were to look at both of this together, the borrowing cost coming down as well as the product mix improving the yield, definitely one expects. And then of course, the income reversal, which was the major impact the previous year from our dip in NIMs, if we look at it, and if that's not going to be the reality going forward big time, I think every trend is looking more positive for us from where we left the previous year.
Okay, well, that seems to be positive guidance coming in, Mr. Iyer, that even the income reversals is something that you're not going to see this fiscal like you did last. But any particular geographical stress you foresee in the portfolio? For example, South India, maybe especially Karnataka and Tamil Nadu?
I think, I think Tamil Nadu continues. Yeah, so I think Tamil Nadu continues to remain a little pressurized for us, because again this year the monsoon has failed in Tamil Nadu, and therefore one has to wait and see what kind of a help or support they get. But Tamil Nadu will remain a little stressful for us even this year, is what we think internally. In fact, our own disbursements in Tamil Nadu has not been very aggressive in the last about 6 months or so. So we believe Tamil Nadu will remain there. I think Karnataka has had, at least for us, it has had its own share of little pressurized situation. While after this monsoon, one could see start improvement out in Karnataka. But clearly, Tamil Nadu and Karnataka will continue to remain the states that we will watch closely and put all our efforts to bring about quality corrections.
Okay, fair enough. Just moving on, now you also have a small insurance broking business. What are the plans? Are you looking at investing more there, scaling it up? At some point, could you be looking at demerging it at all?
No, so clearly it's a broking business and it doesn't require really any big capital for growth per se, right? So therefore we just have a strategic investor in that, in Leapfrog, who actually have vast experience of doing insurance in developing countries, and that's how we got into alliance with them, to get the benefit of their knowledge on the product side. As otherwise, there are no real plans around MIBL at this stage. And of course, the other subsidiary of ours, which is the rural housing subsidiary, that's a very fast growing subsidiary that has maintained a growth rate of upward of 40% plus. And they would need capital as well for growth going forward. And clearly MMFSL holds 87.5%, and therefore we will be infusing capital into the business for its growth.
Okay, so can we expect you, sir, to raise any capital for the rural housing finance business subsidiary?
No, so not at this stage, because we are just kind of finding the model right. It is now maintaining a growth of about 40+% year on year. It's running a book close to 5,000 crore, and we believe in the next couple of years it has an ability to grow itself into a large book of close to about 8,000-10,000 crore. We are getting into semi-urban and low-cost housing, and we believe in the next couple of years 20% of the assets will come from even that segment. And therefore we believe that we'll continue to invest adequate capital for the growth. Currently NHB is at 12.5%, and they continue to remain invested in that business. As and when we hear from them their plans, I think that's the time we will make up our mind as to what should be our clear next step. But I must tell you that the growth of that business will definitely be supported and fueled by capital infusion by MMFSL.
Okay, well.